The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the March 13th, the magical Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I are going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I want you to know I am absolutely grateful for your presence here. But even more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. Phone lines are open, and we'd love to hear from you. Of course, if you've got a question and you can't call in, go ahead and send me an email. Send that, or at least send it to steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got a bit of a mixed bag. That mix goes like this. The Dow, the S&P, and the NASDAQ are trading higher, 159, 16, and 121, respectively. To the downside, it's the Russell, the semis, the trannies, the New York Stock Exchange. If you take a look at Goldilocks, it's up $47. Silver $150. Light sweet crude is off $1. Natural gas up 15 cents. 30-year Treasury up 2 points and 18 ticks. Leading the charge dollar-wise, the upside, we got Alumina up $37, nearly 20%. MicroStrategy 18%, $35. CGen is up $28, 16%. We've got some movers and we've got some shakers. Shaking those trees, our First Republic Bank. No surprise there. Down 73% or $59. Western Alliance Bancorp down 67% or $33. LPL Financial Holdings down 11% or $25. UMB Financial 26%, $20. Obviously, SVB fallout here. You just got financials and so forth all over the place. So let's take a look at what the equity markets are doing by looking at the equity future contracts. For that, we're going to begin by taking a look at those white background charts out there. So if you give me a moment, we will flip over to them. Where'd it go? Here we go. We'll flip over to those charts here in the upper right, upper left, I should say. You've got the ES Mini. Well, you should notice, a couple things you can notice. First, it tops with a TD9 count. It turns into A to B equals CD to the downside. Does that on Friday. This morning, it attains the 1-to-1 price level. Now, you can see that price here. I've maintained that exact same angle of that A to B line. And see how price here is on the very left-hand side. That's a stronger side. In other words, there's a stronger movement going on right now from the C to D leg than there was from the A to B leg. That typically indicates that we do more than a 1-to-1 A to B equals CD pattern. The only thing that would violate that or suggest that that would not happen is to get some type of bullish reversal candle. All you really need to do today to get that is you just need to spike above Friday's high, that's 39.78 and close one tick in the northerly direction out there. So be on the lookout for that. So far, we haven't touched Friday's high. We've touched Friday's low, not Friday's high. In the case of the NQ, it has already completed a Gartley buy pattern, which entails a buy the D point. It did that on the trading session of March the 2nd. That is perhaps the most important level to watch. Why? Well, first, it's been tested. It was tested on Friday and rejected. It was tested again this morning and rejected. That level specifically is 11,964.25. If price closes below that, then we had lower out there with the next target to the downside being 11,498. I'm not saying that's where price stops. I'm saying that's where price would head to. But right now, you still have a Gartley buy pattern inside the NQ, and that can keep these markets higher. If you take a look at the Dow, which negated a TD 9-count bottom pattern that formed on March the 1st. It did that on Thursday of last week. It negated that pattern, and it also has completed its at least the one-to-one move of its A to B equals CD. We're probably around the 1.272 area. Just like with the ES Mini, it could form a key reversal bar today, needs to be able to spike above Friday's high, and needs to close one tick in the northerly direction. In the case of the Russell 2000, that's the weak one. That makes most sense that it would be the weak one. Why? Well, it sort of makes sense to Stevie with regard to SVB and the number of small businesses that could be impacted by what the Fed or what the Treasury is doing. But right now, here's what we know from a technical standpoint. What the Russell 2000 has is an A to B equals CD to the downside. So far, it has achieved the 1 to 1.618 area. So it made that. The actual 1 to 1.618 price projection would have been at 1732. The low today, 1736. So a bullish reversal candle in the Russell, inside the Dow, inside the ES Mini would generate Gartley buy patterns. Those would then trigger a move, or should trigger a move, up to their oscillator and change lines. Markets are extremely oversold, or at least we'll go take a look at that. But New York Stock Exchange was still trading to the downside. It's still extremely oversold. So we should expect at least a bounce or a bottom. Right now, what we will go with is a bounce. We don't have a signal of that just yet, but pay attention to those daily charts out there. Again, no bullish reversal candles that would typically say that we are likely headed lower. So that's what's going on. We take a look at the equity future contracts out there. I mentioned that markets are oversold, so let's go take a look at that specific chart out there. We'll also take a look and see, as long as we're talking about, in essence, a version of market breadth, by taking a look at the advanced decline oscillator, let's pull that up here. We can see that on Friday it closed down at the level of minus 297. Right now we're at minus 288. This is extremely oversold. Now, we don't have a bottom signal out here, but here's I pull this chart back, and you're looking at that center line out there. Let me make sure I'm in the right spot. I am. You can see even at the worst case, back in March of 2022, price, so this can move lower, just so you know. It most certainly can move lower. Back on a March the 11th, you got down to a minus 309 reading, minus 353, minus 392, all in this area here. But we're really getting into that range where you have to expect and anticipate at least a counter trend rally out there. So we want to look for signals, and the best signal would come from bullish reversal candles inside of the daily equity future contracts out there. What else do we need to look at here as long as I'm here? Nothing that I can think of, but let's go switch back. So let's go take a look at we'll take a look at, I know, I don't want to screw up the screen. So let's take a look at market breadth right now. So as of 11:13 in the morning, this is looking at the market breadth for the S&P 500 for its 30-minute time frame. It is bullish. 211 above profile, 136 below. Let's take a look at the 30-minute market breadth for the NQ. It's also bullish. Well, it's got 51 above, 15 below. So that's what's going on a 30-minute time frame. Let's take a look at the 60-minute time frame. Has that positive market breadth bled over into it? Well, as we pull up this set of charts out here, on the S&P 500, the answer is no. It is market breadth bearish for all four time frames other than the 30-minute. In the case of the NASDAQ 100, it is market breadth bearish for all four time frames other than the 30-minute chart. So we come back from this breakout here. Let's take a look at the 30 and the 60-minute charts. Now we'll get on to the requests that we've got. MDB, Zion, AMD, C, Las Vegas Sands, Fuel Cell, CS, and hopefully some more. Steve Rhodes with TFNN. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we got things mean and green almost out here. You got the Russell and the trannies are the only 2 indices right now trading to the downside. Let's go take a look at those 30-minute time frame charts out here. Remember, the ES and the NQ both having positive market breadth with regard to the number of instruments trading above the top of their profile versus below the bottom of their profile. If we look at the ES Mini, right now we can see that it is trading above the top of its profile. It closed above it as we came into the 11 o'clock time frame. A second close of about 39.10 and a quarter says this is breaking out. I would say the real breakout message comes when they close on a 30-minute base above 39.02.75. That was the high at 7:30 this morning. Where would price likely target? To the upside, I'd have to say 39.70.50. That's its TD9 count breakdown resistance level. That thing has acted as resistance for quite some time, so that is the likely target. No idea whether price will be able to take that out, but it hasn't in the past, and maybe it won't again this time too. If we take a look at the NQ, and all of these have bottoming patterns. The ES Mini formed a Gartley buy pattern or buy the D point. It does that at 10 o'clock. We got a buy the D point at 10 o'clock inside the NQ. We get a Rhodes Momentum Indicator and buy the D point pattern inside the Dow Equity Future contract, Rhodes Momentum Indicator signal. That confirmed at 10 o'clock inside the Russell 2000. So each of these forming the type of bottoming or topping signals, patterns that we take, in this case here bottoming, that we look at all day long here at TFNN. So you got bottoming signals. In the case of the NQ, very likely headed back towards its highs out here. And I'm referring to the highs at 3 o'clock this morning. That's up between the 12.185 to 12.222 area. In the case of the Dow, it is likely headed back to 32.628. That's a TD9 count breakdown resistance level. That thing has been tested and it is held. In the case of the Russell 2000, it's trading above profile right now. I would say its next target to the upside is going to be the high from 7:30 this morning, and that's up at the 1797 level. Those are the 30-minute charts. They look pretty good. The 60-minute charts there, they were still TAS market breadth bearish. So as we take a look at each of the 60-minute time frame charts, we see Rhodes Momentum Indicator bottom patterns for each of these, and we now see in the case of the ES Mini, it's got a new profile. I believe it's running right into that resistance level, which is at 39.30. Put that on your pad of paper. 39.30. If price closes above 39.30, that tells you the ES Mini is headed higher. In the case of the Russell 2000, it is just getting back into profile levels. So this is the time period here from a profile standpoint, I'll call it a time standpoint as well, where the NQ is about to run into some turbulence. So as your pilot, I'm telling you that you should put on your seatbelts because we've got resistance levels at 12,179, 12,208, and still with a resistance level right now at the 12,135 area. So should get a little bit bumpy here. In the case of the Dow equity future contract, price is trading above the top of its new profile at 32,334. So this is suggesting it wants to get back to its recent highs. It had a TD9 count top that took place at 12 noon on March the 10th. That's your resistance point of 32,692. You close above that, you're headed to 33,101. In the case of Russell 2000, you're going to deal with resistance here right now. That's the top of its new profile from a 30-minute standpoint. Let me move this off here so we can actually get that feel. That is at 1788. So 1788, we're at 1786 right now. Price closes above that, we're headed back to its TD9 count area, and that's in between the range of 1819 up to the 1824 level. So even though the 60-minute time frame charts are still market breadth bearish, what should happen here, because we're up at these resistance levels, is we should start to see a turn down. If we don't and price continues to move higher, then likely we're going to get market breadth that's going to turn positive as well out there for the 60-minute time frame. So that's what the current status of the equity future contracts are as we speak right now. We will come back to those. Let's get to some of the questions that have come in. The first one from who was it? It was David H. Tomball, Texas. Wants to take a look at ticker symbol MDB. So let's get up to those charts here. And I may have to use both sets of screens out here. Mondigod, I don't even know how you pronounce that really. Just 204.81. Yeah, so it's really trading at 204.81. My system is showing 203.99. I don't know what the issue is. But here's the question. The question from David H. is, let's actually get to it. Let's read it. That would be helpful. He says, hey, Steve, I have the 200 puts expiring on March 17th, and I'm wondering, according to your chart, is it likely that the January 16th low of 164 will be hit by this Friday? And my answer to that question would be, at the moment, the answer to that would be no. And here's the reason why I say that, or I suggest that to you, David. Here we can see that we're in an A to B equals CD to the downside. That was actually confirmed on Friday with regard to a volume. And that does say that we should get down to 179.52. And I'm okay with saying 179.52 is a possibility. However, and this is the big however, David, if it's me, I'm probably closing out, well, you're not in the money, would have been to have closed it out around the low of Friday or the low of this morning, and at 189.53. Of course, you might say, oh, geez, Stevie, anybody can do that after the fact. No. You've listened to the show for a long period of time, and you know I'm consistent with regard to what I'm about to say, and that is this. When price gets above the top of a bearish structured profile, and that's what we had here. This was a bearish structured profile. The bottom is all the way down at 157.86, which is really where you're kind of gunning for. But the center is at the 189 level, and the top is at this 205-ish range out there, 205.36 to be exact, 189.53 to be exact on the center of that profile. When price gets above it for more than 2 consecutive sessions, we are above it for weeks out there, a counter trend move on a pullback will find support at the center of that profile, 189.53. Well, the low so far this morning was at the 189.59 level. That is close enough for me. So knowing that that level has held out there, it's not that there's no chance, but it's not a likely chance between now and Friday out there. So that level has been tested, it's held, and maybe it just bounces up to the, I'm not saying this is all out bullish, but your question specifically, will it get down that level? Even if it does start to move lower, 179.52, maybe all you would really get out of it, because that's the TD9 count breakout level out there. And that would be about the 1-to-1 A to B equals CD. I see consolidation inside the weekly and the monthly profiles. Support there on the weekly is down at 181.30. Price would have to bust through that to get to your area. I just don't see it happening as we speak right now, David. I hope that helps you out. With regard to MDB on Friday, what did this do? This was day number 2 of consecutive closes lower out there. That's your typical knee-jerk reaction. out here we have, so not unusual to see today's price activity. I do hope that helps you out, David, and best of luck to you with regard to that trade. The next question is coming in from Duffy inside the Tiger's Den. And Duffy wants to take a look at Zion, Z-I-O-N. So let's pull up those charts. I believe that is a bank, if I'm not mistaken, out there. Yeah, it looks like a bank to me with regard to the stock chart. Zion Bank Corporation. What was the question? I don't know what the question was, Duffy, but we'll take a look at the charts. Today will become, believe it or not, bar number 8 of a TD9 count pattern on a daily time frame. So what Zion Bank is signaling to you and I is that it could, not that it will, but it could form a bottom between today and Wednesday out there. And that bottom, that TD9 count bottom pattern, would then likely take price all the way up to its Southern change line at the 44.40 level out there. We'll look at the short-term time frame chart, see if there's any type of intraday signal on that. On a weekly basis out here, what you've got in place is an A to B equals CD to the downside. It looks like it has at least gotten to the 1-to-1 level there. So let's take a look at that pattern. We'll just draw on the A to B. We'll just move that over to the C point to see where we're at in this there you just right there. Yeah, so you're at the 1-to-1 A to B equals CD, and a bullish reversal candle is what's needed there for a buy the D point pattern. We come back from this break, we'll further look at Zion for Duffy inside the Tiger's Den.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. So we're taking a look at Zion Bank shares out here on a monthly time frame. It's completed the 1-to-1 A to B equals CD price projection. That would have taken it down to $24.97. We got below that early this morning. Price has also pulled back to its monthly TD9 count breakout level of 23.02. So the daily's got a TD9 count bottom that may form, or should form, actually. Today's going to become bar number 8. 90% of the time, it goes on to complete bar number 9. out here. So, and you're back at a support level on the monthly. The weekly is the one that's the real holdout. Now, when we form a potential topping or bottoming pattern on a daily time frame, we look to the intraday charts. Right now, the only one that I have available to us is a 30-minute time frame chart, and this confirmed a Rhodes Momentum Indicator bottom. What you need to see here, if this is going to be some type of bottom out here, Duffy, is at least a close above its oscillator and change line on a 30-minute basis. That's up at the 33.81 level, and then you've got some battles, as you can see, up top between profile levels, a TD9 count breakdown area. So it's got some potential out there. I would just keep a close eye on it. But we got to be careful really with regard to the entire banking industry itself. It may be a good hands-off approach as we speak right now. When there's one rat, there's more than another rat out there. And so this could go on for quite some time unless the Treasury is going to say, hey, we're not going to raise interest rates anymore. But that doesn't seem like the case after last week's sessions out there. So time will tell. Let's go on to our next request. So Duffy, I hope that helps you out. If there's something else you're looking for, let me know and I'll be happy to get that to you. If we take a look at AMD right now, this is for Duncan Steve inside the Tiger's Den. And Duncan prices above the top of its daily profile, below its green oscillator and change line. So I just see just a consolidation pattern that is going on out here right now. Nothing more, nothing less than that. On a weekly time frame, things are relatively bullish. There's an A to B equals C to the upside. There's no bearish reversal candle that is completed. So over time, AMD wants to get up to 97.60. A nice TD9 count bottom on the monthly time frame. The key level here for price to deal with is at the green oscillator and change line. That's currently printed out at 90.06. The price were to close above that, you're set sail for higher price. Those higher prices would be 103.93 and 120.09. So just a consolidation pattern that we have going on inside of AMD. So I hope that helps you out, Duncan, and thank you so much for the request. Our next request coming in from the Tiger's Den as well, and it's from Dano. And Dano wants to take a look at ticker symbol C. Is that Citicorp out there? So if we take a look at Citicorp, again, another bank getting crushed like all of them. And on a daily basis, we don't have any kind of a bottom signal here. Now, there's certainly an A to B equals CD to the downside that is present. You would need to see a bullish reversal candle to confirm a buy the D point pattern. Likely, what Citigroup is headed towards is 44.65. You're below the bottom of its weekly profile. That's not a good thing. No, look, I do see a rising trend line out here. We could draw that in real quickly. So if we draw in the rising trend line, it would look something like this. Well, maybe it's really kind of breaking through that rising trend line. So there's a suggestion that we are headed lower. The swing point, the next swing point that is in play is from back on a weekly basis. That is, I can't read it, December 23rd. And that runs from a low of 42.91 to a high of 44.89 out there. Volume so far today is 17 million shares. That swing point has volume of 111 million shares as well. 17, 2 hours of trading. Price is pulling back into a swing point with lighter volume, but it's not all the way down there just yet. So it's pulling into this swing point here from December 20. Oh, it's pulling into one from December 23rd, but it hasn't made its way all the way there just yet. That swing point had 94 million shares. Even still, you're pulling back in the case of Citigroup on lighter volume. Very interesting. I still wouldn't touch it. Not yet. We got to see how all this falls out, and I doubt it's all falling out in one single day. So, Dano, I hope that helps you out. I know you also wanted to take a look at Las Vegas Sands. So let's go take a look at what's going on in Vegas out here. Las Vegas Sands trading out at about $56 and change, although I think my system is being delayed here. So let me just move over to the other system. 55.81 is what it says on my other screen versus 56.19. Sorry about that. At this stage, what do we see? So we don't have any kind of a pattern other than a Rhodes Momentum Indicator top and prices below the bottom of its daily profile. That would suggest a Stevie lower price. Lower price to where? Well, the weekly has a Rhodes Momentum Indicator top. So the next downside price target for support is at the 54.55 level. This is a bullish structured weekly profile. The support zone, and it has to be a zone, is between 51.66 and 54.55. Top on the weekly. Top on the daily, even a wave number 7 top on the daily. And on the monthly chart, you're going to form bar number 8 this month, but it's only the 13th. You should form bar number 8 this month. which could set up a TD9 count top. But we really don't have enough information on that. So where's Las Vegas Sands headed to? I would have to say that it's dealing with this swing point from back here in February of 2021. February 21st of 2023. Hello, Stevie. Hello, wake up. The low of that session is 55.40. The volume there was 3.4 million shares. Price pulled back with about 2.5 million shares on the 24th. Pulled back on Friday with 6 million shares. So that 6 million was going into 3.4. So there's your volume pushing into that swing point. We're still in that swing point. Price should test the bottom of that swing point. Has it done? It's doing that right, or it already did that today, I think. The low was 55.40. Today, the low was 55.07. The volume is 1.3 million shares. If price can close above that swing point high, 56.87, do it with less than 3.4 million shares, it has a chance to do that. Then you have a test rejection of a swing point on lighter volume, and that would then suggest a move up to 58.14, 58.87. So right now we're going to call what we see here in Las Vegas Sands is nothing more than a consolidation-oriented pattern out there, with price having its next support at 54.55 or even between 51.66 and 54.55. So, Dano, I hope that helps you out with regard to Las Vegas Sands. Thank you very much for taking the time and writing in. The next request was to take a look at Fuel Cell, FCEL. This is for ABCD inside the Tigers. I believe this is for Dan. So let's get this populated here. Let me get my other chart screen going too, since we've got some type of data delay or something, some type of feed issue. We're printing out at 321. Okay, not much further than where we're at on my screen. So now, what do we have out here? You know, there is a to B equals CD pattern, but the B point, which I would use as bullish hammer candle from back on March 2nd, that is, hasn't been taken out. So I won't draw the A to B equals CD pattern in unless that does take place. In fact, that is held. There were 7.5 million shares traded that day. On Friday, 20 million shares, pushing down and testing, rejecting that. We did push down against that again this morning. We're at 6 million shares. That 6 million shares is going against 7.5. So price is very likely to get back down and test that level again. And that level is down at the 309 area. You're below profile support. You're below red oscillator and change line. Those conditions are bearish out here. Don't really have much else. On a 30-minute time frame chart, you've got a bit of a bounce going. That bounce is courtesy of that Rhodes Momentum Indicator signal out here. And you are in bar number 7, Dano. So this says that that would take us to 12. So I would say between 12 noon and 1:30. That's your window, 90-minute window. Fuel Cell on a 30-minute time frame is likely to form a TD9 count top and then is likely to pull back a bit. That's what I see when I take a look at the charts for Fuel Cell, FCEL, Energy. Steve Rhodes with TFNN. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we've got the Russell still trading lower. It's up 9 points. Traders are down 175. New York Stock Exchange also trading to the downside. The Dow's up 156. S&P 21 out there. We're going to go take a look at Credit Suisse right now. This is for Peter in Park City. Peter, I don't know what you're doing with this, how I can best help you out as we take a look at the daily time frame out here. I don't have anything. You know, there's probably an A to B equals CD to the downside. If we take a look at that pattern, just the small one that is in place right now, it would look like this. I think it probably puts it out of business, but can't be sure of that. Let's just move that A to B point over to where the C point is at. Whoops, sorry about that. Didn't mean to move the entire screen, but I did. Let's try to grab this again. Here we go. That'll take, there's our B point of the A to B equals CD pattern. Let's squeeze this thing down. That gets us down to, doesn't get us down to zero, gets us down to about $1.80 or so. So I'd have to say the 1-to-1 A to B equals CD has taken us down there. The daily time frame doesn't show me anything to suggest that it's not going to continue to do that. As we look at the weekly time frame, price is moving lower. It is trading below a hammer candle. That hammer candle formed 2 weeks ago. That low, of course, the week just began, is 270. We're at 247 or so right now. Again, I do have a delay. Let me just make sure. Yeah, we're 253 out here. So other than a bullish reversal candle, the weekly chart is saying dive, dive, dive. Now the monthly is in the bar following bar number 9 of a TD9 count. That does suggest we should see a TD9 count bottom form sometime this month. We take a look at the daily chart. It does not today, that's for sure. So be patient. We are getting a little bit of a bounce. No surprise there. It formed a Rhodes Momentum Indicator bottom pattern on that 30-minute time frame. Price right now is dealing with resistance. That's the red oscillator and change line. So very safe to say out here that if price can overcome that red oscillator and change line, we're printing right now at about 255 out here. Then that would suggest a further rally, Peter, and that further rally could take you up to 267. But if you're asking, do I see a bottom? I don't see it on any of the charts out here, and looks like we may head lower still. So, Peter, I hope that helps you out. Thank you very much for the request. Let's go to our next request. In fact, it's the last. No, I take it out. We've got 2 more out here. That request is coming from McGuppy inside the Tiger's Den. And the question is to take a look at I don't have that. Where is it? ARKG. Well, let me do this. ARKG. Let me put that up there. Nancy asked a question about Apple, and I've got a different set of charts for us to look at that because she's interested in the short-term time frame. So let's get ARKG up on our screen out here. This is for McGuppy, ARKG, and I apologize. I don't recall the question, but I did remember It says, is today a bullish reversal candle? Yes, it is. As we speak right now, this is a bullish engulfing candle with price pulling back to TD9 count breakout support at 27.36. So, yes, good spotting there. Of course, the day is not over, so we don't know whether we'll continue or complete a bullish engulfing candle at day's end. But the answer to your question is yes. Now, what does that complete? Well, I see at least a buy the D point pattern. There's at least a couple of them in here. So the conservative one runs like this. Here's our A to B point. And then we just simply, I can at this stage here, just move that over to the C point, and you can see that, yeah, this is made more than a one-to-one. A to B equals CD. You're getting a bullish reversal candle at a breakout level of support. Now, McGuppy, as you know, the standard operating procedure here is that price should go target its oscillator and change line. You're at 29 and change right now. ARKG, it is exactly printing at 29.02. Oh, that's what my screen says. So not a great risk reward to that 29.54. On the weekly time frame, prices just simply pulled back to a prior swing point from June in 2022. That had volume of 22 million shares. Last week we came down with 11 million shares. Well, you've got price moving back with lighter volume out here. A close this week above 30.05 on less than 22 million shares would be a test and rejection of a swing point. So you've got that going for you. And on the monthly chart, what you have going for you is price at the breakout level, 28.71. So be careful here. By the way, on a 30-minute time frame chart, you're about to form a TD9 count pattern. Bar number 8 is in process right now. That will complete. That says that what you should see out here is at least a short-term top between 12 noon and 1 p.m. out there. And if you get that, what you should be looking at then, McGuppy, is a pullback to its oscillator and change line. That's currently printed for the 30-minute time frame at about the 27.76 area out there. So that's what I see when we take a look at ARKG. Today's move higher, is that to be expected or anticipated? Well, we did have 5 consecutive bars to the downside out there. And the last time we had 5 consecutive bars to the downside was November 22nd. We saw a one-day rally, and then the price resumed to the downside a bit. So, yeah, it would be expected after 5 consecutive sessions to the downside that you would see at least some kind of relief there inside of ARKG. So hope that provided you with all the information that you were looking for. McGuppy, best of luck to you on that trade. Let's go take a look at Nancy wanted to look at, which was Apple. And so for Nancy, what I did was I put up our multiple time frame set of charts out here because we can get down into 15, 30, 65, 130, the 195, the daily, the weekly, and the monthly. If you're analyzing any equity, these are the time frames that I recommend you use. Why? Where'd you come up with 195, Steve-O? Very simple. Take 195, multiply times 2, and what do you get? 390. What's that 390? At 390, you are a full trading day out there. We have 6.5 hours of trading. That would get us there. 130, there's 330-minute bars on a daily basis for a equity out there. You want to have equal time frames out there. Otherwise, you're comparing apples to oranges. And not that that's not a bad comparison. It's just probably not the best comparison. We're taking a look at stock technical analysis. So these are the time frames. Nancy wanted to know, what is Apple doing on a short-term basis? Well, you've got a TD9 count top that is going to complete here at 12 noon. Actually, it's going to form at 12 noon. It's going to complete at 12:15. Apple, take that high, whatever that high is. I don't know that it's the current high, but certainly by the 12:15 mark, whatever the high of Apple is, if price closes above that, Nancy, tells you about a strong momentum move to the upside, with Apple's next target being 154.19. More likely than not, we see at least a little short-term pullback. That short-term pullback could get to the 150 and change area out there. The 30-minute time frame, no topping pattern as we speak. Looks like price wants to target 154. TD9 count on the 65-minute time frame. This suggests price wants to target 153.72. So on that TD9 count for the 15-minute, you know what to be able to look for the high, and that'll make a determination if, in fact, this takes out that pattern. Well, then the 30 and the 65-minute charts give you price target levels, 154.19 and 153.72. You've got a nice buy. The D point pattern looks like forming on the 130-minute time frame. Price right now is dealing with resistance, the bottom of its profile out there. If price can clear that, that's at 152.68. You're going to move to 153.83 out there. Finally, let's just keep it as a finally on the daily time frame. Prices trade above the top of its profile. It's trading above its green oscillator and change line. And what it's dealing with is resistance at 153 even Steven. So watch that 153 level. That's a TD9 count breakdown area. We did see one close above it. That was on the trading session of March 6th. And then price decided, well, I don't like it up at those highs. And it's back inside the range, so to speak, or below the TD9 count breakdown level out there. So Nancy, I hope that helps you out with regard to Apple. Again, very short term. We may be seeing a short term top by 12.15. Could pull back to 150. If, in fact, that pattern fails, we're headed to 153.72, 154.19 area out there, with 153 being a level to most certainly watch. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We're taking a look at Independent Bank Corp of Michigan. This is for McGuppy inside the Tiger's Den out here. This is pulled all the way back to the lows from 2022, June of 2022. Out there, you can see that by taking a look at the weekly time frame chart out here. On a daily basis, what you have is an A to B equals CD to the downside. You need a bullish reversal candle to confirm a buy the D point pattern. If you were to get that, that would then suggest a move up to its red oscillator and change line, currently in the 21-ish area. If we look at the weekly time frame chart, as mentioned, price is back to its June swing point. That June swing point, June 17th, did volume of 580,000 shares. So far today, you are at 63,000 shares. So 63,000 is so far is going into 580. Wow. So if price closes above that swing high, which is 1891. Now, it's only Monday of the week, but if price does close above that, you could get a test and rejection of that swing point out there. On a monthly basis, basically, when I take a look at this chart here, what I see out here, McGuppy, is just a large consolidation, with the lows of the day getting now to the bottom of that consolidation pattern. So I'd say you really want to watch the low here from the hammer candle that formed the month of June of 2022. That's at 1787. If price closes below that, this is telling us that it wants to head lower out there. Hope that helps you out, McGuppy. Let's go take a look at Fletch's question. He wanted to take a look at Hood, HOOD. So as we take a look at Hood, we can see A to B equals CD patterns out here. Looks like they have at least completed at least the one-to-one, probably more than a one-to-one. So you need a bullish reversal candle. Price made its way back to a breakout level of support at 849. So you need a bullish reversal candle to confirm a buy the D point or a Gartley buy pattern. On a weekly basis, you are consolidating with inside its weekly profile. The support range out there is down at 874, resistance 1187. And the monthly chart, unfortunately, isn't really providing us with a ton of information. So to close out the show, in just the next few minutes out here, if I take a look at the NQ and I look at the short-term time frame out here, the shorter-term time frames, I'm not seeing a whole lot of topping patterns, but I would focus on the 60-minute chart out there. That's got that Rhodes Momentum Indicator bottom and price running into profile resistance. That's between 12.052 and 12.081. If the NQ can close above 12.080, well, actual number, close above 12.095.75. If you close above that, the NQ is going to head higher. Folks, stay tuned for all the other programming. I'll see you in a